finding imbalances has been one of the most keyest things that I've been doing to really get good risk to reward trades. When I combine that with order flow, they go kind of hand in hand. In this video, I'm going to break down the trade that I took this morning, what I did, obviously just price action standpoint, and then of course breaking down my trading journal. I think it's very, very important that you guys can understand. But as per usual, guys, I'm going to go on the 2 hour time, the 2 hour time frame. Now, on the 2 hour time frame is where I like to kind of look at the overall view of the market. Now, let's rewind this back actually to about 8 in the morning, because roughly 8 in the morning, guys, that's when I do my pre-market analysis. Like 7 in the morning, 8 in the morning. We'll go 7 a.m. just to keep it safe. Now, 7 a.m. on the hourly time frame. First, let's go on the hourly time frame. What did we see, right? I want to start teaching you guys what I look for if you guys want to adopt my trading strategy to your guys' trading strategy. But I look at the high of the session, the previous session, which is the London session. So obviously we saw London, we created these higher highs up here, which we had liquidity sitting at the top. So for those of you guys that do not know how to like identify liquidity, whenever we reach a high, wherever we reach an area where we create an imbalance, that's typically where we have liquidity sitting. Now, liquidity or imbalances are basically open orders from institutions, and they're a key thing is that they play like magnets. They always come back to get filled. Now, a perfect example is this one right over here, right? We saw a massive institutional candle. So you guys can see from this specific chart right here, every single candle is moving choppy. Every single candle is going side to side. But we have one specific, massive candle, which is known as an institutional candle that basically institutions use to push the market up. That's their way. That's our way of seeing when they got in, so to speak. Now, obviously, when we shot up, we created a gap where basically there wasn't a connection between this candle and this candle here, like the body to body. So body to body, it's like there's a gap. If you notice here, body to body is basically beside each other, always beside each other, not relatively, like not a relative difference, so to speak, right? So obviously here we have a imbalance. Now I use this indicator up here called Lux Algo Fair Value Gap, but I've gotten to a point where I can already identify these, and I just use this just to sharpen my eye. But you guys can see here clearly. Let's pull my my rectangle here. You guys can clearly see there is an imbalance right here, meaning there's a gap. And whenever there's a gap, price always likes to come back to that gap and continue to move back up. Why? Because there is liquidity here. There is money sitting here, and institutions never leave money on the table. They always come back to collect it, so to speak, right? So you guys can see here specifically, we had an institutional candle, imbalance here. We shot up. What do? We consolidated a bit right at my whole number. That's why I have these lines, because my whole line, the numbers of the whole number, so 6470, 6480, 6490, 6500, they all play psychological numbers, where SPX specifically likes to shoot from to the upside or to the downside. This is why it's very important to stick to one pair or two pairs and understand the characteristics of that pair. So for me, I noticed that SPX moves very, very, very well at these whole number areas. So that's why I have these marked up already on my chart. Now, you guys can notice that we move sideways, sideways, sideways. What did we do? We came back down. We literally went into the imbalance, gathered the liquidity. Look at the time at the bottom of my screen. It's 9 p.m. 9 a.m. My apologies, EST, which is what time is when the New York market opens. Now, this would have been a great setup. We've seen price consolidating. We could have put our markup here, and this could have been a bounce play to gather the liquidity down here, sweep these lows, and then gather and shoot all the way up, which is what essentially did happen. So what did I notice here? I saw that. Let me make my camera a tad bit smaller so I can bring up my editing tool up here. So I saw that specifically on this specific price action chart, we saw that we created a higher high up here, which is London high. It was a psychological level. We broke the highs here previously on New York close, which was the day before at 64.92. So we created a high of 64.95. No, sorry, my apologies. The high here was 64.90, and we shot up about 2 points. So this was an area that we wanted to break for us to continue to the upside. So if we were to go bullish, I would have liked something to be like maybe like this, and then stay above this line here, and then obviously up to the upside. But what did we see here, guys? We saw us getting exhausted going towards 6 in the morning. So what did I want to see, guys? I wanted to see how price would react at the 64.90 area. I wanted to see how we will react to, because why? We have liquidity here. Are we going to take the liquidity and go to the upside, or are we going to take the liquidity, sweep it, or like, you know, basically take the liquidity as an institution and go down? Like, what are we going to do? So I saw that we had an imbalance here. So I saw that there was money here, meaning that there was an institutional candle here. There was a massive gap. It never got fully, you know, basically retested. Like we had a small little touch here, but not like a deep dive in and then back up like we did basically here. Like look at this, guys. We had an imbalance here. We had a deep candle coming more than 50% into the fair value gap and then shooting up. So that's what I basically look for. I look for price to test minimum 50% of the imbalance to confirm my basically theory that institutions are gathering their liquidity and they're going to make a move from that. And then from there, I look at basically order flow, and I see the level of orders coming in for buyers or sellers. Like even this, guys, like look at this. This is a perfect example. Friday, we got the rate cut news that rate cuts are very likely to happen. We had a massive institutional candle. This is not healthy. Remember, guys, whenever we have candles like this, expect a retest right back to the imbalance. So where did we, where did we go to? We went literally, so this imbalance was like, you know, 50 plus points, give or take. And what happened? Price shot up. It consolidated a bit. Friday came. Then Monday came. We were kind of stagnant. Nothing really happened. I remember Monday was very choppy. And then on Monday late New York session, we come back down late 9 p.m. going into London. We come back and we literally gather all the liquidity here. So smart money gathers the liquidity here and we shoot back up. Now, just kind of looking at the chart, we have an imbalance here and we have an imbalance here. So I would not be surprised if we eventually come back down. Maybe we don't come back down right now. Maybe we come back down here in the bear market, because right now clearly we're everything's going bullish. Things are looking very good economically. So we might come back down here in the bear market, or maybe right now. I don't know, but this is an area that I have marked up, and I have my liquidity signs, you know, obviously marked up on them. Now going back to this candle. Now I wanted to see how price would react in this position. In my group chat that I have with a few of my, or not a few, like over 80 plus people that, you know, I help with trading, and, you know, we're a community and whatnot. I dropped that I was looking at the zone of 64.90. I wanted to see how price reacts at 64.90, and I'll show you my trading journal in a bit talking about this. Now, as I play this on the 1 hour time frame, currently right now at the stop of this video is 6 in the morning in terms of the candle. So what do I notice at 6 in the morning? Obviously I'm sleeping, I'm not awake at that time, but now we're moving into basically 9 a.m. So you guys can see I'm gonna play it in the smaller time frame. But what did we see here? We saw price accumulating. We struggled at these highs up here. And what do? We rejected down, got the liquidity here, and most likely, just me looking at this, we're going to shoot up. And let's play the video. And I'm going to play it in the smaller time frame so you guys can see what I'm looking at. Because I want you guys to, yes, use order flow, but order flow, in my opinion, is it's not really, what's the best way to say it? It's not profitable if you don't understand price action. Because if you can understand price action and you combine it with order flow, you are golden. So obviously, what happens when we gather the liquidity? we're gonna obviously bounce off this level and go with the trend, so to speak, right? So let's play this video and we can see institutions gather the liquidity and they're off to the races. You can see that we create highs and we create a new all-time high for SPX. Now, let me delete all of this. Let me delete all of this, and I'm going to put this in a smaller time frame, and then I'm gonna teach you guys basically what I was looking at in terms of order flow, because it's very important to, I guess, understand order flow, because you're gonna be able to see like essentially what is happening in between every single chart, every single candle, sorry. Now let's go on the 5 minute, because the 5 minute is where I like to get my entry, and I'm going to explain to you what I saw here. So one of the things that had me get into my position was the retest. So it's very important that when you're looking at massive moves down, you don't get impulsively. You want to get in at the retest. So let's rewind here so you guys can see everything, right? So where is this? I usually get on the charts at about 8:30, 8:45, if I'm being really honest with you guys. Yeah, like about 8:45, like right here. Perfect. So boom. So what am I looking at, guys? So again, I know there's liquidity down here on the 1 hour time frame. We have a fair value gap here, or an imbalance. We have liquidity here. So this was an area that I was targeting, so to speak, right over here. Ironically enough, they play out my whole numbers, at my 6470 number. It's really weird how everything kind of aligns. But that's dope on its own. Now, this is what I was looking at. Now, I was favoring shorts. Why? For two reasons. Number one, whenever we trade an all-time high, you don't like we're in price discovery. Why would you long, in my opinion, an all-time high when there's no real, I guess, benchmark? Because it can go higher, yes, but like eventually it has to retest, and it retests to the previous low. So what I was noticing, and this is just me looking at the 5 minute time frame, we struggled at these higher highs. We struggled at these higher highs, and we're clearly struggling at these lower highs. So we didn't break we broke these highs, but we didn't break this higher high. So I know that there's liquidity up here. Obviously, it's a no-brainer. But more importantly, I know that this is a psychological level where we're struggling. So it would be kind of stupid of me to try to long this position. Now, again, I learned this very, very early on when I started taking trading serious. You need to start thinking like an institution. Now, ask yourself this, right? Ask yourself this. Let me clone this, because this will help you understand trading at an exceptional level. What would you do as the bank? Would you come here and just from here, like literally from here, drop down and get this pool of money and then shoot up? Or would you rather shoot up, get this pool of money, and then drop down, take this pool of money, manipulate people, and then go right back up to create new highs? Think like an institution, guys. An institution always likes to buy at a discount, sell at a premium. This is price action 101. This is smart money concepts 101 without getting too technical. I'm going to repeat it again. Institutions like to buy at a discount and they like to sell at a premium. Hence why we struggle at these higher highs on two different occasions. On two different occasions, we struggle. So I want to see how New York opens. I want to see what happens during New York Open. But based on what I'm kind of seeing, I'm seeing market manipulation an hour before New York opens. We're getting people wired to think, oh yeah, we're on an uptrend. We had London drop, maybe New York pump. But if you understand smart money concepts, if you understand liquidity, why would an institution want you to make money easily? Why would a broker want you to make money easily? This is where market manipulation comes into play. So they're going to push price up at these highs. get you to think that we're gonna keep pushing up and then come dumping down everyone's bag, right? So let's look at the time frame. So right now, this is 8:45. I'm looking at the chart around this time, 8:45, 9 a.m., 8:30, but about 8:30. 8:30 to like 8:45, I've already got my zones in. I already know what I'm doing, and I'm A-okay, and I'm ready to go. Now let's play this video. So as market is moving right now, we are at about 9 in the morning, and price has, again, has shot up. We had a break of these higher lows. We bounced. We're going back up here. We created lower highs, and it looks like we consolidated. We're going to keep going up. So again, someone that doesn't understand liquidity and smart money, they're going to be like, oh shit, we're on an uptrend. Let's keep going up. So boom, boom, boom. And now look, manipulation at its finest. We see price right at 920, right before market's about to open. We're about to test these higher highs. So people might be thinking, oh shit, yeah, I'm going to get in pre-market. I'm going to get in right away, yada, yada, yada. And mind you, this is not using order flow. This is simply price action, breakdown. Now, what happens is as the video plays, boom, we test these lower highs. We're obviously struggling. We're literally obviously struggling at 925. I believe this is the 925 candle. Yes, 925. We test lower highs. We can't seem to reach higher highs as of yet. And then we drop down. Now, as I play the video, I can't even make this up even if I wanted to. Again, think like an institution. Look how it aligns well with the liquidity up here. Look at this. Swept. And the average person, again, that does not understand price action, candlestick patterns, and simple smart money concepts, they're going to be like, wow, we had a rejection candle from these two bearish candles to the upside. Yeah, we're going to go straight up. But ask yourself, guys, this. Ask yourself this. Did we break the highs? Technically, we did. But did we close? No, we didn't close. We broke. We went right back down. Now, if we would have done something like this, we broke, retested the higher highs, and then we would have had to move like this. But clearly, we didn't. Because you want to understand something, guys. The market moves in waves. You know, we have higher highs, higher lows, higher highs, higher lows, higher highs, etc. And what makes the move valid is as long as we don't break our takeoff zone. But clearly, what do we do here? We created higher highs, higher lows, higher highs, higher lows, lows. We shot up, right? We did this. But when we retested, we broke down. That's a break of market structure. It's a break of pattern. Again, simple chart work. So let me come back here. We had a massive wick down, right, at 935. So this is where again, an average person would be like, oh shit, yeah, I'm gonna get in for a sell. This is stupid. That'll be a stupid move on your opinion, in my opinion, for you. What you will always want to wait for is you always want to wait for the retest, because it's gonna give you a better entry. Because in trading, it's not about getting in rushy. It's about getting in precisely. Because look at this, guys. All right, look at this. I'm going to move this to the side. Actually, screw it. Let's say the big impulsing move happens and you get in right here. Dude, you just hit stop loss. That's why you must wait for the retest. Because if you don't wait for the retest, your A+ setup is going to hit stop loss. I've had a lot of people, like whenever I trade, a couple people message me on iMessage, on Telegram, on Instagram. They're like, yo, bro, like we took the same trade, but my first trade hit stop loss. Why? And it always comes back to the same thing. You didn't wait for the retest. Now, obviously, that's why you want to wait for the retest. So my stops is right above the higher highs of this candle where we created new highs. So obviously I know that is a psychological level. Prices is getting exhausted. We are creating almost like a shooting star rejection candle from the previous high. Now obviously it doesn't look identical to it, but the concept remains the same. We're rejecting off a high, which is a bearish indication based on this, you know, modified shooting star rejection candle that we're going to reverse. And again, this is just price action. This is not talking about order flow, which is, again, something that I recommend everyone use to enhance your PNL. Now, obviously, let's see how this plays out. Look at that. Off the retest, look at that dump. So this is where I got in. So obviously price shot down. I waited for the secondary candle to print. We shot up. We had a retest right back at my entry at 64.89, 64.90. Johnny got in. And then boom, second candle in. We're up already 10 points. I could have closed my position right here if I really wanted to. But I had targets for these lows right here. Why? Because there was liquidity here. Let's play this video out. Take profit hit. And then obviously, identical situation to here, guys. We gathered the liquidity here. Price is manipulating because somebody might be like, oh yeah, like, oh, we're going to keep going down. Let me get into a sell right here. Again, you need to understand what just happened. We took liquidity from here. Why would we drop down any lower? I mean, we could have gone down. We could have possibly gone here, but we didn't. We created lower lows. Again, very similar to a rejecting candle from the lows. Kind of like a shooting star, so to speak. Maybe not thoroughly, but you get the point. A rejection candle at the bottom. And then we shoot up. Why did we shoot up? Because we gathered the liquidity here, right? The Federal Reserve gathered their money here. Federal Reserve hit take profit. And now the Federal Reserve is shooting the market up to take the liquidity up here to create new highs. And look what happens. Look at that. Boom. Boom. So what made the market shoot up like this? It's money, smart money. That's what made the market shoot up. So now, manipulated people that thought we were going to get into buys here took their money because their stop losses were down here. Then we wrote this down. Everyone that said, oh yeah, let me wait to get in here, liquidity taken here, stop losses up here. Yep, let me do one of this. Boom. Take your money, take your money, take your money. Now we're off to the races. And that's manipulation 101. And if you don't understand price action and simple candlestick work, you're gonna get eaten alive every time stuff like this happens, because this is massive manipulation at its finest. Now let me make this a little faster. And you guys can see we create highs, create new all-time highs for the S&P 500. And within, what is it, 5, 10, 15, within like 10, 15 minutes, we hit take profit. Depending on your account size, you would have made a serious amount of money. Now, that's why I took the position just simply on price action. Again, what do I do whenever I'm looking at the charts? I always look at the 1 hour and I look at the 2 hour. I look at the 4 hour, but I like the 1 hour a lot because it shows me a little bit more of a story. The 4 hour, it's not bad, but it's too broad. Like I want broad, but not too narrow, so to speak. And where I find that I get the best, I guess, outlooks from the bigger time frame is the 1 hour and the 2 hour. It gives me the best outlines so far. So, you know, that's where I'm able to kind of see my liquidity zones. I'm able to see any imbalances that need to get filled. I'm able to see where we have resting liquidity, et cetera, et cetera. So right now, this area is massive. If you notice right now, the crypto market, we're bearish, right? So, you know, obviously I don't think it's going to happen, you know, that we're going to go right away down, but eventually we will hit here. eventually, in my humble opinion. And imbalances, again, they always play out because price are attracted to these areas because they play like magnets. Now, breaking down, right, my trading journal, right, let me break it down to you guys so you guys can kind of realize what I saw. So again, I want to teach you guys what I see. And again, I marked this up. You guys can see here, 9:01 a.m. I actually marked it up a lot earlier, but this is when I sent it to my Telegram chat, and I wrote this. This is literally what I wrote from my from my from my own message that I sent to my Telegram chat. I dropped it here in my trading journal. So I wrote this. I said that this is what I see for SPX. My zones I have targeted is 64.90, which played as a nice roof to price brackets liquidity as it being London highs plays a strong role. Now my next zone is 64.70, which is right here. For the reason is that we have an imbalance here, liquidity. I want to see how price reacts around these areas and how order flow reacts to. We have a 10 a.m. orange folder news, so be aware. We also have CNBC article hinting bullish activities with the word being rise. I would say I am a bit careful with the setup, especially for longs, due to the fact that we're due to the fact of SPX already being at an all-time high. So I wrote this down. This is what I was looking at. Again, the same concept that I kind of just explained to you guys. Pre-market article, we're looking bullish, but again, this doesn't mean that we just get in blindly into buys because clearly we would have lost money. It's something that we should be aware of. Now, the trade breakdown itself, again, we had liquidity down here, which is what I was targeting. And then boom, we created an imbalance. We had an imbalance that needed to be filled, which was right over here, which is between 72 and 68, which aligns with my 64.70 take profit zone. And we had a shooting star reversal pattern at the very top at these higher highs. So this gave me the confirmation that buyers are getting exhausted, just simply price action. Buyers were getting exhausted and we were good to go for shorts. Now, the trade itself, how it played out, this is how it looked like. Let me actually zoom in a little bit better so you guys can kind of understand what you're looking at. So obviously, just breaking it down fully, we created that shooting star. We bounced off these higher highs. We're exhausted from basically highs price manipulation. We had liquidity down here, so we needed to sweep that at the lows. We had the value area high here, the value area low here, and the point of control. So this would have been a really good entry to get into. But for me, once I saw the retest here at the valley, roughly at the little above the value area high, we saw a massive volume cluster. Now, a volume cluster just basically means that there's a lot of transactions being happening in this area, whether it's buys, whether it's sells, which is what I want. Again, you want to enter the market where there's the most volume, not where it's choppy. You don't want to enter here. 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 You want to enter when there's a lot of transactions, a lot of business being conducted between buyers, between sellers. So you're able to get in at a sharp time. So obviously we had the break, we had the retest right here at this low volume node. So low volume nodes play a massive role. Basically these could be areas where price rips from, as well as high volumes, or it could be like a high volume of a low volume node, meaning a low area where volume happens, to a massive move. So again, it's like, think of it like price moving choppy sideways and then it explodes up, or price moving choppy sideways and then it drops down. So that's what I kind of look for my high volume node my low volume node to high volume node setup. And again, this is terminology that order flow traders use. I use this a lot. If it confuses you, it'll just take you a while to learn it. Just to think about it when you first learn price action, or if you're still learning price action, it's a whole different language. Well, order flow is the exact same thing, but when you apply order flow with price action, you're gonna like 10x your trading 1,000,000%, and you're able to risk a tiny amount. So obviously we had the bounce here. Once we drop down here, we enter the high volume node. Buyers or passive buyers were getting exhausted from here. We saw aggressive sellers stepping in here, right at the point of control. We saw price ripping down, which gave me the confidence to overall take and hold this position. Now, That's volume based. So this is where the big move happened from here. So I would say from value area high to point of control, if you didn't get in anywhere here, not that you wouldn't have made money, but your R multiple would have been very low. It wouldn't have been a good risk to reward. Now going towards the delta footprint. So the delta footprint is something that I use a lot. For those of you guys that have been watching my videos, I kind of talk about order flow a bit, but in this video, I might talk a little bit about the footprint chart. So the footprint chart is going to show me what is happening between every single candle, because within every single candle, there's things happening inside of them. So I talked about this before. It's like, think of two guys grappling. It's the best example I can give you. Think of two guys grappling, and they're roughly the same size, 160 pounds to 160 pounds, both 6'1", both same wingspan. They both look relatively the same body mass, size-wise, strength-wise, look the same. But one guy has abnormally more strength than the other guy, even though they're identically the same thing. With order flow, you're able to see who has the strength before the move happens, before the big drop of that other guy happens. That's order flow in the simplest way. So you guys can see here that we have I'm not gonna say ask and bid because I'm gonna confuse the hell out of you. We have a buy side and we have a sell side. Green buy, red sell. Very obvious. Now the darker your reds are, the darker your greens are. Shows us if they're aggressive. We also have little things called imbalances that pop right here on the side. We have them here, as you guys can see here, where we show pockets of aggressive sellers or sellers coming in opposed to passive buyers, or vice versa. So right off the breakout here, this is the candle that we broke out of. So right off the breakout here, I saw us basically print out a negative 2.08 million contracts executed candle favoring sellers. We had a pair of aggressive buyers here shoot us up. But ultimately speaking, we had a lot of aggressive sellers, a lot of dark colors here, more than the red, more than the green, more than the buyers. So I knew that overall, even though we did shoot up, we only shot up because of these aggressive buyers here. But sellers were holding strong. Again, we were in a trend. We were at a buying exhausting level. Now, price absorbs. So think of it like I have a sponge. That's an example. I have a sponge. I squeeze it and I throw it in a big bowl of water and I let it go. It's going to absorb all the water. So this is all of the sellers absorbing all of the passive buyers trying to push market up. But clearly it's exhausted. Clearly it's struggling. On the next candle, we test my 64.90 zone. Boom, I execute my position. Now, why did I execute it? Obviously, price action, I just mentioned it to you. But order flow specifically, we had aggressive sellers here. We had a negative 222,000 contract executed candle favoring, obviously, sellers. We had the following candle, a negative 5.68 million contracts executed favoring sellers. We had an imbalance here, which this pocket had us in an immense amount of aggressive sellers. So that means that this was 300% greater than this block, which is showing me that buyers are losing strength. They're getting exhausted. They're done. Sellers are actually like defeating these other buyers. Think of it like a war. It's the best example I can also give. Think of it like a war. Sellers are absolutely defeating buyers at this point. Now, when we go to the next candle, again, you guys can see we have little buyers, little to no buyers as well here. And this occurs when there's aggressive sellers getting involved or vice versa, aggressive buyers. So obviously we had a zero here. We had dark, which pushed price down massively. We had a stacked imbalance here, which means that this order was 300% more than this. This order was 300% more than this, and this order was 300% more than this. So you guys can see that in this specific block itself, we had 567,000 contracts executed for sellers. Here we had zero for buyers. Here we had 266 contracts executed for sellers. Here we had zero. Here we had 500,000 contracts executed for sellers. Here we had 0. So again, think of a tug of war. Think of two guys grappling. You're able to see, okay, this is where the drop is going to be big time. And this was a 950 candle. The 950 candle was basically somewhere here. I think it was this one that dropped horrendous. So this was a 930, 935, 945, 950. Boom, 950 we dropped. So again, when I see this, and when I see the volume profile, I'm like, boom, I'm like, dude, I'm gonna get into this position. I'm already in the position. So this solidifies me. And then once we create this imbalance here, and I see aggressive buyers kind of, forming like that staircase, downward staircase pattern, like imbalance going down. I'm like, dude, I'm confident in my position. I'm locked in. And at this point, we're already approaching take profit. So I'm already looking to, exit my position. There's no need for me to hold. Now, that's order flow in a nutshell. Hopefully I didn't confuse you, but in a nutshell, guys, this trade played out beautifully. The pre-market analysis, I identified an imbalance where liquidity was sitting between 64.72, which was right here, and 64.68. That was an area that I was initially targeting with SPX creating higher highs and new all-time highs. I anticipated a healthy correction whenever the market flows, forms new highs, or new levels. A retest often follows to a continued overall direction. Because what happened after this big ass drop? Price gathered itself and then it shot all the way back up. I was targeting that imbalance zone for a price to collect liquidity before moving back up. My decision to make this SPX position, my decision to take this SPX short, which netted me a little over 17 points in profit, was based on this setup. We formed a shooting star pattern above the highs, singling, buying exhaustion. Once we broke below 64.90, I waited for the retest to avoid entering at a poor level. Again, wait for the retest. If you get in too early, you're going to have a bad R multiple, and you're likely going to hit stop loss, and your trade will go in the right direction. Patience is key, especially when you're trading smart money or just price action in general. Again, ending up with a weak R multiple. I set my stop loss at 64.94, just above the highs, giving me a 4-point stop. My take profit was placed at 64.70 on the 5-minute chart. After the break and the secondary retested candle to my level, it gave me the confidence to enter. A low volume node lined up with my entry, and I noticed buyers stepping back while sellers began taking control. Again, I talked about that high volume, a volume cluster right after the retest and then a drop. As the retest candle moved lower, a large volume cluster printed. I just mentioned that right now. Buyers tried to defend, but sellers overpowered them, driving price down to 64.70 within 3 candles. On my Delta footprint, I saw a negative 2.08 million contracts, followed by a negative 22K contracts, followed by a third candle of 5.68 million contracts, all favoring sellers. This was showing me selling was strong here. This created price action imbalance, and the final candle showed little buying pressure, along with multiple single and stacked imbalances on the Delta footprint, confirming continuing downside momentum, which gave us that big drop to fully clear my take profit. Now, once price filled the fair value gap, the imbalance, I closed my position. It already hit take profit for me. It closed it automatically. This setup was suggested a potential reversal since 2 imbalances were formed in the 5-minute time frame, meaning price might retrace to recover liquidity. Throughout the move, the Delta footprint chart showed me aggressive sellers, dark red clusters, dominating with very little strong buyers, which was a dark green, which is not clusters, it's just dark green. At 9:45, a massive 5-minute candle printed with a heavy volume cluster at a strong point of control. That gave me the valid secondary entry, or that gave me the valid secondary re-entry. My apologies, I could put re-entry. Because I did get in on the retest. Spelled that wrong on the retest. But since I was already up, I chose not to be greedy. Oh no, never mind. That was right. So I talked about that basically here. When price retested off this big drop and it went back up here, that could have been a retest, but there was no need for me to be greedy. Less is more. Following my game plan is key. And since I wrote here, but since I was already up 9 points, I chose not to get greedy. In total, the trade yielded me a 3.92R multiple, nearly 4R with 4 points of risk and over 18 points gain. My target was 20, but I did close that. But when price hit 71 and retraced to 64.72, I felt comfortable locking in my profit through, though I was just 2 points shy of my original take profit. It doesn't hurt to close your trade early, guys, especially if you're like 1 to 2 points away from take profit. It's better to secure your gains and have a big winner turn to a loser. As always, I give credit to God for allowing me to recognize the setup, and I'm truly grateful to the focus and the determination He gives me to keep improving my skills. Guys, at the end of the day, that's why I took this position. That's why I was able to capitalize off it. That's why I always, journal my position, so I kind of see what I did right, what I did wrong, etc., etc. But hopefully, guys, this video brought you some value on how I identify my entries, how I use imbalances to target how I use imbalances to target my take profit, my apologies, or identify a key entry point, and how I'm able to look for liquidity, because obviously liquidity is when we create highs, when we create imbalances, which is typically lows, and I use that as a form of an entry and as a form as an exit. And I put my stop loss below whatever candle I'm trading. So let's say I'm trading bearish, I like to put it at the higher high, right above it, and that's typically a 5 to 4 point stop loss. If it's the lows, it's the exact same thing. So if I was getting into, let's say, a sell, I like to put my stop losses above this lower high. If I was getting into a buy, let's say here, I would like to put my stop losses below these higher lows. Again, that gives me that good R multiple, which is between 2.5 to 4R. Higher is obviously better. But again, guys, hopefully this video brought you some value. Make sure you lock in with trading, guys. It's very important that, for those of you guys that are actively investing in the market, you build an active high-income skill. So when you do have those profits from the alt season, you guys are able to diversify that in day trade and catch when stuff drops, just like it did so. So make sure you like, comment, subscribe, share with a friend, guys, and hopefully y'all have a beautiful day. Peace out.